Define your focus is on retirement tech, and we are are you looking at that, or is that only in
Yes.
my mind?
Oh yeah. No. We have an event actually June 22nd in our building. Love to have you there. So
Well,
11.
good. I'll use and jump on almost every excuse to jump and come and visit you on the East Coast. But
Yeah. Yeah. Well, I'll send you a link. We have a good event going. As you kind of know, during the pandemic, we pivoted our incubator to focus on areas that were a little closer to our core business. So that was retirement, it was MedSup, it was age tech, products and companies that were more closely aligned with us, but probably, a good chunk of the talent were based more than 200 miles from Hartford, Connecticut. So we still kept our local focus, and we've been doing some interesting work with the University of Hartford and the Barney School of Business, also with a partner, Symetra. But we took the opportunity to really connect with people doing interesting things in the retirement related space. That includes everything from money, health, wellness, to annuities. Oh, yes, to Medicare supplement insurance. One of the biggest expenses you have in retirement is your health care. People don't realize when they go onto Medicare in the U.S., and you still have to pay for it. And oh, yes, you have to pay for the deductibles. And right out the door, people have to pay $6,000 a year per spouse for healthcare coverage here in the U.S. That's a big bill. Now throw on your living expenses, your home or apartment or whatever you have, plus food, plus utilities. Of course, we've got a lot of inflation going on today, which is, for somebody living on a fixed income, is a stressful situation, or can be.
So how do you plan it, right? Because that will be a big question, because they are all tied together. Because your future income and your future health, or wealth and health are tied together. So when do we supposed to start planning for that stuff?
Great question. Great question. And
Thank
I
you.
think
This is why I'm here.
Well, a lot of different people have different approaches to how you do it. Some are simple or sound simple. Some sound complicated and are not as complicated as they may sound. But everybody has an income statement. Everyone has a balance sheet, and I think the factors you can't control or have a hard time controlling in planning are things like, what's the market going to do? When you're not earning income, you're not putting money in your 401k. What's your health going to be? Are you healthy or you're not? And I think we all have a much greater appreciation these days for our health than we ever would have. And even things like climate. Paul, what are you talking about? Well, think about this. Most of
no, I agree.
Well,
I don't know where you're going with that, but climate will affect. It's not just, hey, should we move to Arizona or Florida? There will be other places that we can move to, places that will be too cold or too hot. I know I'm a little bit facetious about that, but climate and the quality of it will impact where and how you live.
Well, you're absolutely right. It'll affect the costs of where you are. Also, it'll impact your balance sheet because for most people, Social Security is probably the biggest retirement asset people have. They don't understand the economics of it. The second is your house. Now, wait a second. Where is your house? Is it next to the ocean? Be nice. What's going to happen to the value of your house? You're living by a river. In my area, we had a huge flood. It was no one would have expected the flooding to occur where it did. what does that do to your home value? You thought you thought you had a $500,000 home, you thought you had $1 million house that you could pull money out of it, either through home equity loans or reverse mortgages. As you got older, the value may have gone way down. Maybe you need
Yeah.
stilts. Maybe you need to put the house in stilts. Okay, you got to put more investment into your house to get your assets out at some point.
And then you have a change and then taxation. So that asset that, well, it was an asset. Now it can be a liability because now you have this house that you need to pay more taxes and you don't have more income to support it. What does it mean?
No,
Are you selling it? Are you moving to a different location just for your, 10, 20, 30 years? And this is the interesting, when we merge, as I started with RetirementTech, and that's a nice closing the loop to Medicarians, which is a conference that's coming up next week in Vegas. And what we are organizing, what we are bringing together, and the slogan will be the future of wealth and health, or SeniorCare, right? So how do we tie all these things together? And I know that it looks like a lot of words and slogans that we throw out there, but they're all connected. How today, when you're 30, 40, 50, you think about, okay, great, I'll be 65, 67, then what?
it's a tough conversation on a number of levels. You got the left brain, I guess. Let's see, left and right. Left brain, which is the left's analytic.
Let's even try to structure it, because we started with like, hey, here's a lot of information and random topics, and let's break it down. So let's start with MedSup. What is MedSup?
Medicare supplement is a program started by the government. This must have been as part of the Medicare program back in the 60s, and effectively gave seniors an opportunity to get Medicare medical insurance at a reasonable cost. Boy, I didn't know. I would have been ready for my history facts.
Oh, I'm sorry. Okay. No. Sorry, I didn't.
Listen, it's a great question. Most people don't understand it, right? So you turn 65, you get Medicare. You have to take Medicare. You have
high deductibles. And because of those deductibles, you need actually to buy another insurance to pay for those deductibles. And that will be medical supplement or medical advantage. And each one of them has the pros and cons and what you can actually handle. And that basically will take you as you are 60. Is it 67 or 65? What's the final?
65 is when you must take Medicare. You must enroll in Medicare at age 65.
So that's a starting point, right? Now, when we are connecting the wealth, right? Your company, you focus on annuities. Are you still selling life insurance, or
no? We stopped. Yeah, we stopped selling life insurance. We still administer a number of policies, but we're focused on the older end at this point. Yeah, it's a complicated decision, and I would suspect for many people, that's probably a defining moment in retirement when you have to make a decision. A lot of the products that we sell, like annuities, give you some flexibility in terms of when you retire, when you take Social Security. So you got decision number one really is with Social Security, because you can start taking Social Security. Actually, let me walk you through your legislative birthdays, Gilad. This is an interesting one. 59 and a half in this country, big deal. Okay, what happens on 59 and a half is you can start taking money out of your qualified plan without a penalty. Now, what does that mean? It means your 401k, your IRA. There are a few exceptions. This is business where there's always an asterisk and a footnote number one. And some people are eligible for it earlier, but most people can start taking money, which means, okay, you can tap in and you're not going to get hit with this 10% penalty from the IRS for taking money out. Big deal. But the earlier you take the money out, the less opportunity you have for that thing that to grow over a period of time and stretch out, your savings for a long time. So 59 and a half, 62. Okay, you actually can start filing for Social Security to take it. The problem is the earlier you go with Social Security, the less you get on a monthly check. Now, the Social Security Administration has sort of done a mortality study and has said, based on, if you take it earlier, the net present value is supposed to work out the same as if you waited to, your last age, which I think is now, it's the last date at which you can take Social Security, I think is, I should know this, is 71. I believe it's shifted a little bit. Okay, you have to. That's the very late date. Well, the longer you can wait, the more you get in monthly basis. Now, if you only are going to live a couple of years beyond, it was a better deal for you to take out the money at 62. I don't know when you're planning to die. I'm planning to never die.
And that's a beautiful segue towards health. But yeah, we can.
Well, it is. In fact, statistic in the U.S. I don't know. By the way, congratulations on the longevity of your family line. I think you should.
Well, I hope to keep it up. Who knows, right?
I think,
with our lifestyle.
I think you need to buy an immediate annuity. You'll make money on that one if you follow in their footsteps. Well, you mentioned healthcare costs in older age, and when you first retire, generally the biggest bill you're paying is that monthly bill, whether it's Medicare, Med Sup, whether it's Med Advantage. But the kind of scary fact here in the U.S. is that if you looked up your lifetime healthcare costs, Gilad, odd statistics say 50% of that bill will occur in the last 6 months of your life. Wow. Think about that. You mentioned what life is like in those last couple of years. Mm-hmm. The consumption, the risk can be so staggeringly high at that point that you hope you have the kind of coverage you need and deserve at that point, that you don't become a burden on your family or your loved ones. No, it's so I think it's a big deal. So how can we take some of that stress away? Well, another interesting connection is there have been a couple of studies that people who have receive regular checks in addition to Social Security in their retirement, from pensions, from annuities, they actually live longer than people who don't. It's interesting. There's no stress, right? This takes your stress away. You're not watching the market. You're not watching your brokerage account. You can enjoy life a little more.
So did they made any research? Is it just correlation, or is there like a causality? I know there is a lot. I think that they've done a few causality between stress hormone and longevity and how you age. That also has some sort of an impact. I need to find the reference for that.
Well, I will say on the life insurance side, this is very interesting. Mm-hmm. Credit scores, very important, used all the time in the auto insurance for underwriting. Your credit score does reflect your risk as a driver. Very interesting fact. We can't underwrite it with it in the life insurance space, but credit is very predictive of your mortality. Remember, credit scores are not a measure of wealth. They're a measure of how well do you pay your bills off. Mm-hmm. So, is it that you, your point, causality,
or correlation?
What is the correlate? Is there a correlation, or higher credit score, longer life, regular source of income, getting regular checks, you live longer. There's something to do with, is it the fact you could pay your bills, you could afford healthcare, probably. Obviously, it's got to have something to do with stress. It must, right? Now, how you extend your life for the rest of what are those other things you can be doing? Monitoring your blood pressure. Mm-hmm. It's interesting during the whole pandemic. I think I saw a statistic from AARP that ownership of fitness devices in the 50-year-old and above cohort increased something like went up by 30%. It was kind of staggering. So something like 35% of people over the age of 55 or age 50 now have some sort of device that measures their calories, their heart rate, um, their health conditions. I can't help but imagine, Gilad, that this will help those people live longer and be healthier.
Now, do we in the industry actually use it, or is it all for, self-consumption of data? I know that I finally bought a watch. It's actually, I charge it now because I'm sitting down. So, to track my sleep, to track my heart rate, oxidation, everything is in the watch. And because it's a polar for running, I follow its instruction for overperformance, under training, and all the things that come with that. Now, we've seen one, two, maybe three different programs within the life insurance space that you need to be a marathon runner so you can get this discount, right? It's a little bit unachievable for most of the people and don't really make sense. Are we going to see more programs, a little bit more of usage of these IoT devices within the industry?
I can't see how we won't a lot over time. I think on the life insurance side, the biggest problem has been how quickly the technology has increased, how behavior has changed, and it's been doing it at such a rate that you can't really. It's going to take a long time for you to get enough true mortality history for the insurance industry to actually price this into products. If we come out with a new product,
yeah. When was the last morbid table that came out? Because this is the core of the actuarial and the underwriting, right?
Well, it's a part of it, right? But if I went to the if I went to the state and said, I want to sell a life insurance policy and I'm going to give a discount based on, somebody taking 10,000 steps. Now, some of the regulators have gotten over a lot of them have gotten over the rebate issue. That was step number one for companies to say this is not a bribe to buy my life insurance. But to actually provide a discount means you have to, in most instances, go back to the reinsurer, because at the end of the day, they have to sign off on any of the changes you make in your any of your rating tables or your procedures. So it's complicated to put something like that in practice, and to be able to price that, you've got to basically be able to say, yes, I have a statistically significant sample that I can say justifies this price or not. So a lot of this stuff is still experimental on the life insurance side. Now, health insurance, and I'm starting to just dip my toe into these waters a bit. I think there's more clinical use of these products. I haven't seen it yet in the Medicare space. I think in the Medicare space, we're still in the mode of, if I give you this free thing, will you stay as a client longer? That's kind of the mode we're in. We're not in yet the mode of, I sold you this policy, I want to keep the rates down across this class, so I'm going to encourage all my policyholders in the state of Georgia to go start running 5Ks together.
Well, or at least start moving, right?
Yes.
And I know. Listen, there is a lot to talk about how we manage our health and wealth in the different states, in the different microcosmoses that we have in different states, even in different neighborhoods in the US, right? There is so much to say, from what's the food that is available for you, at what price, the fact that you can get the same food years around, although, hey, vegetable used to have seasons. There was the cucumber season, the watermelon season, and now you can get it all the time, year around, which is great and not so great. And then, of course, we always need to think about the future, because if we are getting any type of a chronic disease today, that's going to kick and how you call that jump and bite us later on as we mature. So we should be careful while we can and prevent that from happening. And needless to say, it's going to make the healthcare more expensive, more complicated. Let me rephrase that. More complicated and then more expensive, because you always need to think about all those moving parts about your health and, of course, your wellness. And there is a big difference between health and wellness, because if you need to drug, two huge jars of medication with you every time that you want to go on a cruise and all the things, it's like, yeah, that's not the wellness or the quality of life that you're looking for. So it's complicated, as we like to say.
Yes.
So let me use this complication and reel us back and talk about Medicarians, because that's where we bring all these people together. And we started this conversation with RetirementTech. And now we're going to talk about SeniorCare, age tech, and the different flavors that come with that. So let me say Medicarians next week. So Monday, June 6th until June 8th in the MGM Grand. The same team that Jay Weintraub and the same people behind ITC, Insure Connect, launching a new conference called Medicarian, which focuses on senior care, age tech, and bringing in together people, of course, like Paul and other folks that are companies like Humana, United Health, etc., and also the startups and the investors in the space, which is about health, quality of life, wellness, of course, wealth, and how do we plan so we can all become seniors, be seniors as long as possible, and most importantly, in my opinion, in the best quality of life that we can have during our tenure as seniors. So what's your plan? What's your expectations from the conference?
They're going up every day. No, you Jay and company, you've been involved. I think have built a conference quickly that has attracted a tremendous audience and just a spectacular array of speakers. Somehow I managed to get on a panel, but that's another story. I'm not excited about it. I'm actually moderating a panel on reinventing MedSup prospecting, because even when you have a product that's good, that's cheaper, that's better, it's tough to actually find people and talk to people in this community. I think this group gets frequently targeted by unscrupulous companies, using unscrupulous tactics, and we need to find a better way here this next year to talk and help people understand these complicated choices they have to make, and also explain to them other options that may make more sense to, as you said, live better, live longer, live healthier as they age over the years.
I think it's live where you want, how you want, as long as you want. Well, not as long as you want, but as long as we hope for.
Yes.
And we left a few anti-dies hooks earlier about the end and death and working with that from planning, but let's not touch it now. We can talk about it later or in a different episode.
Excellent. Yeah. Well, and also I'm really excited to do some recording on the floor, Gilad, when you're free of your duties. So we will be interviewing people on the cutting edge. Anybody who's listening, it'll be there. We invite you to stop by the Nassau Financial Group booth and share your story. we're excited. I think Jay's done a wonderful job. I'd say building a bigger tent this year. Conference before was the place you had to be if you were a Medicare supplement agent and distributor. I think Jay's broadened the platform to include, as you mentioned, health tech, age tech, and I predict he'll be focused even a little more on some of the retirement financial planning issues, which are naturally going to fit and complement those pieces in the puzzle the following year. But really excited about Las Vegas.
How
And
are you?
I don't know.
Frankly, I'm sorry. I'm not a big fan of Vegas. Only conferences which basically work take me to Vegas. Again, Vegas is huge. It's as you fly in, you see how big Vegas is, and usually we only experience the strip and then a specific hotel because of the conference, and it's very, how can I say, intense during those 72, 96 hours that we are there. So it's a little bit, you need two
Oh, it
weeks to
is.
recover after that. But otherwise, yeah, I have nothing against Vegas as Vegas, just that specific thing. And that will be, the Vegas experience until ITC. And, it used to be ITC and enough, but this year I have a feeling that we're going to do at least twice, if not three different
Okay.
conferences in Vegas.
Yeah.
But,
Once they get you in, it's they do a very good job of not letting you easily leave the building.
yeah. Yeah, and that's actually a great opportunity we can later on check how many steps you've done, because remember, between the expo hall, the casino, the hotel, you're at least going to have, previous time at ITC, I had like 20,000 steps a day.
Wow.
So we'll see, because no matter where you go, you will pass through a casino. It's so far, far away.
Yes.
But again, jokes aside, well, we need from time to time a little bit humor in our industry. Now, so Medicarian is going to be very interesting, bringing people together, especially building on the MedSup past conferences. And I think that in the next few years, we're going to see how we're going to build that specific brand on towards age tech and what does it mean, because it's not just the planning of the retirement. It's bringing those people together and helping them to introduce them to the other consumers, the health, the service providers, to the incumbents. And as people meet together, that's where innovation happens, right? We create the connections, people converse, aha moments happen, and it just helps everyone else, as it cascades down or up or to the sides. Really depends where you're cascading into new innovation and new products, and especially new services. And I would say that's the main idea. If we can help a new startup, and we have the innovation and product show stage that we talked about, that's the stage that I'm going to MC. We have 20 plus companies that's going to showcase their product and how they are going to improve, or how they are actually improving the life of seniors and future seniors, right? As they make better connections to support mental health, better connections to plan for your retirement, so you'll have the right financial, so you can have the right quality of life and the right health. Because there's a big difference, as we mentioned earlier, right? If you're going into retirement with the cardiovascular problem and diabetes type 2, it's a little bit different than someone who's stepping into that space with 0 chronic diseases or one which is stable and treatable, versus something that can go and run wild. Yeah, I'm sorry, man. I've been just mumbling.
Yeah. Listen, I'm fascinated to see the companies you pulled in. I think they'll. I think there is such a bright future for companies in this space, and I think they are going to have an enormous impact on our society here. When you think, what, 10,000 people a day are turning 65, and the number's only increasing, the market's going to be big. And this is why you'll see as many carriers as you will over those next couple of days, because I think a lot of people see the opportunity. Just, again, nothing in this business is easy, and nothing worth doing is easy. Changing behaviors, boy. You talk about your parents. Try to get your parents to put in like home monitoring systems. They don't want. It's a battle. I had this with my mother, who passed away a number of years ago. But Gilad, try to get her to get help for herself, so that there's less of a burden on me. And it's not easy. There's a huge behavioral, psychological amount of work we have to do in the space as well as technology. So, but yeah. If there is.
No, there are a few startups that are going to present their telemedicine and different monitoring, if it's for your parents who live far away but still live alone and self-dependent, or if they are in a home or other type of institutions. There are so many different flavors today of living solutions, but we are not living in the same village or in the same house like other places in the around the world, right? We are the weird ones in the Western world, the ones that moved away from the nest and live several hours plane ride away from our parents. Most of the world are still living in the same building, in the same neighborhood. If something happens, there is the younger daughter, younger son, that lives with the elder parents. It's still, that's how it operates in the majority of the world. But for us, like, we'll put them on an iceberg and send them to Florida, which is, I know, it's a little bit dark, but it's very sunny in Florida and hot, and people like it. And they have crocodiles and tigers.
Yeah,
I don't know why.
I don't know. It's Florida for me. I don't know. I guess there are parts that I would be very happy at. But to be a little more positive, another study I think that came out of I think Stanford program. Stanford has a really interesting aging.
I believe you. Yeah.
Program. People over the age of 50 actually are statistically more happy than they were in their 20s and 30s. It's interesting. You kind of got through the kids, got through the career. So there's potentially a lot of happiness. So now, again, average population means some are not so happy. Some are much more happy than they ever were after that age. So I say for all the problems and all the challenges, it's actually can be one of the most rewarding parts of your life. And I would just say, how do we, given what we have, given the fact that we've kind of broken down the sort of, as you described, the nuclear community, if there's such a thing as that, even though we've broken that down, somehow life is still good. Life is still good as you get older. And my wife keeps telling me that. So, and
I think that's the best time. They keep saying that 30s is the new 20s, 40s, maybe 40s is the new 20s, and 50s is the new 30s. I have a feeling that there is a point that after you reach a certain professional or financial growth or stability, then you can start enjoying life.
You can, yes. And then there's some just insane people.
And
there's some insane people, like my friend who I just spoke to, my age, who has a 3-year-old. And
I don't know what's your age, but
yes,
I'll just, fine. That can be challenging. I see that. Yeah. Ooh, wow.
Yeah. So what else? What else? What else should we cover?
What else should we talk about? I don't know. We talked about getting A. We are talking about the expectation. Who should come and say hi to you at the Nassau Financial Group booth and join one of your interviews? Is that going to be, how is that? What's the setup? Is that I'm dropping in from time to time when I'm
Mark
not in...
Fitzgerald, who you may have met, who's on That Annuity Show, co-host of ours. We may have some new characters popping up to pin. New characters. And yeah, I'd say come by. Look, you've got an interesting product, interesting technology, something that's, going to change change the way people live, change the way they act, change the way they interact with the community. Come and talk to us. We really want to highlight how people are reinventing aging, right? And come find us. We want to amplify your story, help you explain what you're doing, why you're doing it. That's always real interesting, right, Gilad? Why? Why do hard things? Somebody told me, if you're going to start a business, it's an 80-hour a week job to avoid working 40 hours a week. And
the other thing that we most definitely need help is the definition. Are we talking about retirement tech? Are we dealing with senior tech, silver tech, age tech? I'm still not really sure which one of X tech we should use to describe that conference, because we are touching so many different things, and a couple of them sound like so. Yeah, that should be a survey.
If you're changing the future, come find us. We want to hear about it. We want to be ahead of the curve.
Yeah, because you're changing the future of our future. Because at the end of the day, we all want to be seniors, and as long as possible, the best way possible.
Okay.
In the best condition possible. Right. That's the important part. Yeah. Fantastic. Paul, excellent. I'll see you next week. It's going to be legendary.
All right, cool. Thank you. Thanks so much.